Hi, I'm Garth McKenzie from traderscorner.co.za. Today I'm taking a look at the US dollar index and the gold price and then a trade in the Gdx Etf. And I'll talk about how these are all interrelated. First up, though, let's take a look at the US dollar index because this is really a pivotal point from the departure point in terms of the other slides that I'm going to take a look at today. So the US dollar index here is a monthly chart that I'm showing. So very long term, it goes all the way back to 2005. So we're looking at about 15 or 16 years worth of trading history here for the US dollar index. And what you can see is there's quite a significant pivotal point at the level of 88 on the US dollar index. And that level was tested in early 2018. The dollar strengthened after that, but now the dollar's been weakening since the rise of COVID-19 in March last year. And it looks as if the US dollar still is continuing to weaken. And that 88 level is a major technical level that's likely to come into play in the not too distant future. So that points to a little bit further US dollar weakness ahead. And at that point, it'll really be critical to see whether the dollar holds that support level or whether it actually breaks weaker from that point onwards. But in the immediate future, it looks like a little bit more dollar weakness ahead. Then I want to take a look at the US dollar price of gold. And this is a weekly chart of the gold price that I'm showing here. Now, obviously, there is a relationship between the US dollar and the gold price. A weaker US dollar typically translates into a firmer gold price, all other things being equal. But also gold is being buoyed at the moment by rising inflationary fears. What you can see on this chart of the dollar gold price is that the overall trend still remains very much upwards, but it has been consolidating in a nice channel since August last year. But that channel has now broken to the upside. So that's a bullish development. And that comes after a double bottom pattern that formed at 1680 on the gold price recently. So that break up above the top of that channel is pretty bullish, and it suggests that the gold price is likely to go back and retest those prior highs from August last year at some point. What I then want to take a look at is the GDX. That's the Vanic Vectors Gold Miners ETF. And this is an ETF that tracks the performance of some of the largest gold mining companies in the world. First up, I'm taking a look at a weekly chart of the GDX. And there you can see there's a fairly close correlation, as one would expect, between the price of gold and this ETF itself. You can see how this GDX ETF has also been consolidating in a nice channel pattern over the last 8 or 9 months, and it has recently begun to break to the upside. So that's a bullish development within an overall rising trend for the ETF as well. And that points to a likelihood that we'll see this heading back up to $45, which is where the prior high occurred in August of last year. And it's possible that it even goes beyond that, but we'll have to see nearer to the time. For now, though, it seems that the path is upward here. And the last chart that I'm showing here is, again, the Gdx Etf, and it's just a daily chart in this case. So it's zooming in on the more recent trading action for 2021. What you can see there is that this ETF has come out of a nice base pattern. It's now beginning to make higher lows and higher highs. And each time this price has consolidated and pulled back into support, it seems as if buyers have emerged at the support level. Now, we've had quite a strong week for the GDX this week, so I suspect we may see a little bit of consolidation in the near term, but keep in mind that the consolidations do look to be providing buying opportunities now. So I'd be keeping an eye on any pullback in this ETF towards about $38 as a buying opportunity, and if it does that over the next few weeks, I believe that will set up the next buying opportunity for another leg to the upside. That's all I've got for you this week. I'll be back again next week with some more market analysis.